So, as you heard in the teaser, FESCO made $28 billion in revenues last year. And if you watched last week's episode, then you also know that they are teaming up with 7Crave, the food delivery company, or what is traditionally known as a food delivery company, but they're now branching out into other things, including cooking gas. So there's a lot to catch up on, and here to join us, here to talk to us and bring us the latest is the managing director of FESCO, Jeremy Barnes. Hi, Jeremy.
Hi, Kalilah. How are you?
I am good. Ooh, your video is not looking so great, but we're going to have to work with it tonight. The good thing is that we can hear you clearly, and hopefully that remains the case. So can you just say something again? Make sure that we have a good connection.
Can you hear me well?
Yes. So like I was saying, Jeremy, the last time you were on was about 2 years ago, and a lot has changed since then. You guys have opened up new stations as well. Tell us, what's new with FESCO?
Right. So over the last year, we opened 3 new stations. So we began the financial year last year with 18 stations. We added 3, including Maypen, Town, and Port Maria. So we're up to 21 stations as at the year end. In addition to that, we launched our FESCO, our cooking gas line. It's called FESCO. And we're really proud of the team, all the members, staff, directors, everybody, that was integral in both opening the new station, including the dealers, and also for the FESCO launch. Really proud of the team. We're able to achieve some, milestones for the year. You mentioned one of them. We had about almost 29 billion in revenue. We did, in addition to that, liters sold of fuel within excess of 120 million for the year. We're talking about transportation fuels, which include E10 87, 90, ultra low, and diesel. In addition to that, we're able to garner about, for the calendar year ended December 2023, which is not our financial year, but the ministry does compile the data on an annual calendar basis. So we're able to achieve 9.5% market share, which is significantly up from when we IPO'd in 2021. We're at about 4.5%. So, more than doubled our market share in 3 years. In addition to that, in the short time that we've been in the LPG space, if you're looking at a trailing 3 months or a static as at December 2023, we're able to achieve 5.5%, as a new entrant. So really, really proud of the team, really proud of the dealers and everybody out there. And most of all, we're extremely grateful for the public for continuing to patronize our businesses and supporting all the efforts we're putting.
Yeah, I tell you, FESCO has become a name brand since your IPO, since the last time you were on. And by the way, Jeremy, you are frozen, but we are hearing you. Your video is frozen, so I'm guessing your internet connection isn't great. But at least we can hear you, so that's good. All right, so you've opened, like I said, your 3 new stations, and you have them in Port Maria, Town, and Maypen. Why did you choose those locations?
Well, most of them are dealer-owned, dealer-operated, but our model is to identify growing areas of the country. Spanish Town, St. Catherine is a growing area. Port Maria is a growing area, and everybody in Maypen is a growing area. So we've identified growing areas to expand. In addition to that, our footprint is pretty low. So as I said, we have about 21 stations in comparison to the big boys. The big boys are over 80, and one king is over 65, and the next one over 55 stations across the island. So we do have a lot of territory which we're not represented or underrepresented. So we do have significant opportunities for growth throughout the island, both rural and urban.
So according to your annual report, you actually have stations in every parish except Portland and St. Thomas. Any plans to change that, especially now since we have new highway going that way?
Yes. So we do have a lot of stations under various levels of development. We don't tend to speak on them until they reach a certain stage. We have made public that we're currently building an additional company-owned, company-operated station on Spanish Town Road. which will, you know, increase our complement of stations in the Kingston St. Andrew area. But if the question you're asking is, do we plan to open stations, you know, in other parishes, including St. Thomas and Portland? Yes, we do have intentions, not yet concrete, but they are on our agenda, yes.
You know, something I'm curious about, I remember when you guys did your IPO and our viewers were asking about electric vehicles and saying, oh, FESCO is here, you know, they're a traditional petroleum company, but the future is electric vehicles. I haven't seen it expand as much as I expected over the past couple of years. What's your take on that? And are you moving into maybe having charging stations? What do you think is the future for the industry?
Okay, so when you talk to, you know, industry players, not just Jamaica, talk in the United States, around the world, they do continue to see the growth in, you know, transportation fuels, traditional transportation fuels, for the next 10, 15, 20 years. So people still going to use gas. The reality for the Jamaican situation is that, as experienced during Beryl, our electricity network is susceptible to natural disasters. Now, I remember Gilbert, you know, so younger people like you, Kalilah, will remember Beryl, but you don't want to be without energy for production, energy for domestic use, and energy for transportation in one fell swoop. So because our network is above ground, which is susceptible to wind and rain and poles falling, the energy mix for Jamaica on the transportation side, I tend to believe that there's a lot more legs on it, just for the simple reason that, you know, electricity cost is pretty high in Jamaica, for one, to start with, and then our distribution network is not as rigid or as robust as it could be.
All right. So we're talking about the annual report as well, talking about, you know, how much revenue being up. You're now at $28 billion, almost $29 billion for the financial year ended in March. So let's talk about FESGAS, which is one of your newer products. How much did FESGAS factor into that?
I think it's in the latter section of the annual report and the financial section where we talk about, you know, on a contribution basis. I believe it was just around 600 million was cooking gas. But you do have to remember, even the 28 billion, that and we don't focus on revenue, we usually focus on gross profit. The reason being is that gas prices fluctuate, as you know, and are announced weekly. So gas prices could be over $200, or they could be, as they are now, in the region at ex-refinery at about 160 and below. Now, that 20%, 25%, 30% swing that can take place within 3 months, you can't put too much weight on that. So we really focus on, at FESCO, we focus on the amount of liters that we sold. One, I was focused on the gross profit. Because the revenue, as I said, by itself is not a metric that truly gives you insight into the business, because the underlying price of the commodity, you know, can vary so much within a few months. So
I'm glad you mentioned profits, because net profit is actually down. You mentioned gross profit. Net profit is actually down about 30%. Tell us why. What happened there?
Right. So as you can see, you know, most profitability numbers are up. So EBIT is up, which is earnings before interest and taxes, which is operating profit. So if you look, if you don't factor in our capital structure, we actually improved our profits. That's EBIT, earnings before interest and taxes. But when you minus interest and taxes, yes, we did slip on our net profit for the year. Again, that slippage was a result of two things, well, three things, and I think we pointed that out. Was one, in the first instance, that there was about $140 million movement in just interest costs for the year. And in addition to that, entering the cooking gas space is very capital intensive. So there was a further, I think, $130 million in additional depreciation, just depreciating the LPG assets over 1 year. So that combined with additional advertising expenses was the reason why, you know, net profit slipped. But, you know, the key numbers for us at this point in time during our growth in this phase is really EBITDA, which is earnings before taxes, depreciation, and amortization. And that was significantly up to about 778 million for the year. And that's really cash flows to all stakeholders, which include cash bill available to all stakeholders. So we're very cash profitable, and we actually increase our cash profitability as measured by EBITDA for the year. In addition to that, for the first time in our business, we actually revalued our assets to keep to carry current value. So there was actually a revaluation of assets or real estate assets, which added another $545 million in profits. So our total comprehensive income for the year was actually about 60 million for the year, almost $1 billion in comprehensive income. But that revaluation gain is a one-off, but it's something significant, as I said, because at IPO, I think we did about 108 million for the year. So to actually in 3 years to get our comprehensive income almost $1 billion, I believe is pretty good for the team, and it's excellent. And what it says is that the people out there are really supporting our brand. They like what we're doing at the service station level, and again, in the short time we've been in the LPG space, they've really supported us tremendously.
That's good to hear. So we have a couple of questions from the audience. Let's move to those. Ryan wants to know, does FESCO currently own or lease the property for which NEPA recently refused the permit for the filling station? Ryan, you get to yeah, let me put that to you, Jeremy.
No, man, we leased the property. It was a renewal of a license. I think, well, I don't think I knew what happened in that instance. It's just that the documents were misplaced. It's not something that happens. I don't believe it happens a lot, and that has been rectified. At the point in time, I think it was just the lease agreement was misplaced on our application form, and we've since submitted that document. So that's not an ongoing issue. Yes, that's been resolved.
Limitless Podcast wants to know when the directors will start buying shares again.
I can't answer personal questions regarding purchase of shares. I do know that how can I say this? Because I can't really answer questions on a personal basis. I am privy to that. There were trades today on the market where when that's announced, it's announced. I shouldn't preempt those notices. But what is safe to say is that our main shareholders remain confident in the business. I know that. I haven't sold any shares. I know many of the directors haven't sold any shares. There's no need to sell any shares. People sell shares and make private decisions based on what their private needs are. In some instances, people may have to pay for children's education, whatever it might be. People make personal decisions, but we're a pretty transparent company as it relates to our disclosures. You can say there's no real.
Limitless, you will know when you know. You'll know when everybody knows. Learn, Grow, Invest wants to know, do you have any plans to raise capital with interest rates going lower?
Again, this is something that I can't preempt disclosures to the stock exchange. There haven't been any discussions on that topic at the board level. And if and when we do choose to come back to the market, we'll make the relevant disclosures. But we are appreciative of interest rates being lowered, and we're appreciative of the implications of interest rates going lower, which is both being able to access funds at the debt level at cheaper rates, and also asset repricing, or the potential for asset prices to go up, which means that stock prices go up, which makes it a more favorable environment to actually raise equity. So we're really happy with the trends that's happening.
Well, let me ask you this way then. Since you guys do seem to be growing aggressively, you have plans for new gas stations, you recently opened 3 new locations. Do you have the financing that you need to take on the expansion that you foresee?
Excellent question. So it's very expensive. CapEx, we spent a lot of money. When we came to market, we raised the IPO was about 400 million, of which 160 million was for selling shareholders. The company actually raised about 240 million. When you do it net, it was about 226 million. $226 million can build a single gas station. A gas station is a very capital intensive investment. There's a lot of assets underground. What you can't see, you see the building, you see the canopy, you see the dispensers, but there's a whole lot of systems that operate underground. So the question you're asking is, how do we access capital to grow? So our model allows entrepreneurs to join our network, which participate in providing some of that equity capital or debt capital to build out their own locations. In addition to that, we haven't paid any dividends in the last year, which will retain our profits, so we also can finance our growth. In addition to that, as you're aware, we raised about $1.7 billion in debt to actually also, which again is attributed to the interest cost that we paid for the year for over 145 million in interest. So yes, we have financed our growth through retained earnings, which was, we started the company with $1,000 Jamaican, and use the profits every year and reinvest it back into the business, back into our people, back into our technology, back into our real estate assets. So that's a strategy we'll always do. We'll keep investing to grow, especially once we see positive ROI projects that are accretive to our profit position and to our balance sheet. So we'll continue to access the capital markets when and if we do need additional. We've been really reinvesting our profits back in the business. But suffice it to say, there's a lot of room for growth, and if and when we do need to access the markets to finance that growth, again, the relevant disclosures will be made so that I'm not preempting anything.
I would love to see a local brand be the prominent name in distribution island-wide instead of, we have all these foreign brands here. I feel like FESCO is in a prime position to be that name that is the dominant player in the years to come. Let's go back to FESGAS though, because it's been about a year now since you launched FESGAS?
We launched around April, May last year, but we really started to get a lot of traction around October. So yes, it's about a year, and again, we've been really surprised by the patronage and the support, from the dealer level to the filling plant level to, as I said, and it's all there because the customers want the product. So really appreciative of the customers who've asked for the product by name and have been supporting the product. It's a very attractive cylinder.
Yeah, that's the see-through cylinder, huh?
Yes, it's a fully clothed cylinder, so it has a mesh on it that protects the cylinder from wear and tear. In addition to that, we also have our composite cylinder, which you can check the gas level at any point in time, and that's available in a 28-pound cylinder. We're also doing forklift cylinders for propane, and we're out there for commercial customers where we deliver propane in our bobtails around the country. So we're really again, just appreciative of the opportunity to serve our customers in many ways. And the cooking gas business, as I said, it grew tremendously around October last year and has continued to grow. And it's a very capital intensive business. So to continue to grow, the reality of it is that you have to have a cylinder to give to each customer. So we have to continually and continuously make investments into adding cylinders to our
yeah. I think that cylinder is a very unique selling point, because one of the issues with cooking gas is that it always done during Sunday dinner. You don't know when it's about to finish, and if it's transparent and you can actually see when you're low on gas, when you need to replace it. I don't know why. Always Sunday dinner, the worst time when the gas always done.
You know why? Because people stewing on a Sunday. It's not just the fried egg and the boiled egg. are they what do you call it? The cook up. It's not the cook up or canned beef or mackerel and rice. It's when they start in some really cooking on the stove, the pot is on the stove for a while. But you know what and that's part of the reason why we partnered with Seven Crave. They have a platform for online transactions and a very app that is on most people's phones for food delivery. They also sell groceries, and the groceries that they sell now include cooking gas. So you don't have to go to our website. You don't have to download any new app. Nothing like that. You just go on the same Seven Crave app that's on your phone. You just click on groceries. You'll see our icon there. So if and when during your Sunday dinner, if you run out of gas, you just click on it. If you're in the Kingston and St. Andrew area for now, because it's limited to just that geographic at this point in time, you can click and you can get your gas delivered to you on a Sunday.
Right, and we had Rory from Seven Crave on last week explaining us how that partnership works. I'm going to take a couple more questions from the viewers before we wrap. So Sean, and you mentioned dividends earlier as you were speaking as well, that you haven't paid dividends in the past year. Sean says, I remember you mentioned that FESCO is focusing on growth at the moment, so dividends is off the table until then, but has there been any change in your stance since then? So people want to know when dividends coming back.
Again, this is a topic that is really a disclosure. These discussions really should go to a disclosure through the stock exchange. So if and when we do, plan to meet as a board of directors, and it will notify the market. But we can talk historically, talk in the past. Yes, in the last couple of years, we have pursued reinvesting our profits in the business to grow, rather than accessing the capital markets through debt and or equity. So
no comment just yet. We just have to wait and see.
Can't comment. Is one of those things where you have to make the disclosure the right way.
Well, understood, guys. FESCO is on a growth path. You heard the plans already. It is very capital intensive. They need to reinvest the money. So, and then on that note, Shells is noting, how do y'all invest? And this is not for you. This is for the viewers, Jeremy. She's telling the viewers, how do y'all invest in U.S. big tech that hardly pay dividends, yet every 5 minutes you expect Jamaica growth companies to pay dividends? So Shells is supporting you, Jeremy.
Thank you, Shells.
Let me see. Philip wants to know, can you share the expected timeline for completion of the Spanish Town Road branch?
I think we disclosed that, we hope that it will be completed by, September next year.
And then final question comes from Ryan. And Ryan wants to know, has the board had any deliberation or discussion about a spin-off and listing of the LPG operations? So turn FESCO into its own thing.
Again, that's one of the things you'll hear through our disclosure. That will be market moving information. So, if and when we ever have a discussion like that, that will be disclosed through the proper channels.
Jeremy Barnes taking the diplomatic route this evening. Thanks for joining us, Jeremy, and all the best with your plans for FESCO.
Really appreciate it, and I love what your guys are doing, informing and keeping the public informed about companies and, just increasing the education around business and stuff. So really appreciate what you're doing.
Thank you. Thank you so much.